In a rapidly evolving crypto landscape, the recent launch of the VanEck BNB spot ETF on Nasdaq marks a pivotal moment. Meanwhile, the approval of Bitcoin Perpetual futures by the CFTC signals a significant shift in regulatory access. Here are today's top 10 stories you need to know. The ongoing discussion around U.S. derivatives policy presents a significant regulatory overhang for the crypto market. Recently, a comment from the CFTC suggested skepticism about the viability of 24/7 trading in derivatives markets. This uncertainty is crucial, as it shows that regulators are grappling with how to fit crypto's always-on nature within traditional market frameworks. Such constraints can greatly influence product design and the competitive landscape of exchanges. Investors are closely watching how these regulatory developments may impact institutional adoption. As more policies emerge, they can either facilitate or hinder the growth of derivatives trading in the crypto sector. The cautious sentiment stemming from this uncertainty suggests traders should stay alert to potential changes. The evolution of U.S. derivatives policy will likely shape the future of trading strategies and institutional engagement in the crypto space. Recent data from CoinGecko reveals that Zora, Ethereum, and Vine are among the most searched crypto assets. Notably, Vine has seen an impressive surge of 86% in just 24 hours. This trend indicates a shift in retail investor attention towards high-volatility assets, often a sign of a more speculative market environment. Such movements can provide valuable insights into market sentiment, suggesting that traders are willing to take on more risk in hopes of significant returns. The rising interest in these assets could be a response to broader market dynamics, including recent regulatory developments and institutional products. Investors might find opportunities in these trending assets, but caution is warranted as speculative trading often comes with higher risks. As the market continues to evolve, the popularity of these assets will be closely monitored for signs of sustainable growth. In a concerning development, North Korea-linked hackers have allegedly stolen $577 million from the crypto space in 2 separate attacks. This incident highlights the persistent security vulnerabilities that plague the blockchain ecosystem, which has struggled to protect against sophisticated cyber threats. The scale of these thefts raises alarms about the adequacy of exchange custody practices and exposes weaknesses in smart contract security and cross-chain bridging. Such breaches can significantly undermine investor confidence, prompting a more cautious approach among traders who fear for the safety of their assets. As security concerns escalate, it is crucial for crypto exchanges and projects to bolster their protective measures and adopt advanced technologies to safeguard against future attacks. The ramifications of these incidents may lead to stricter compliance and regulatory frameworks in the crypto sector, as authorities seek to enhance consumer protection. Investors should remain vigilant, as the landscape will likely evolve with increased emphasis on security protocols. In a significant enforcement action, the United States government has seized approximately $1 billion in cryptocurrency linked to Iran. This operation underscores the growing importance of blockchain analysis tools in law enforcement's arsenal, enabling authorities to trace and identify illicit financial activities. The seizure is part of broader efforts to combat the financing of terrorism and other unlawful activities, reflecting a heightened vigilance regarding the use of digital currencies. For market participants, this development highlights the ongoing risks associated with illicit financial flows, which can lead to increased compliance costs and affect investor sentiment towards privacy-related assets. Regulatory scrutiny in the crypto space is becoming a constant reality, prompting traders to reassess their strategies. As governments worldwide ramp up their enforcement efforts, the landscape for cryptocurrency transactions will likely shift. Investors should remain alert to how these actions may influence market dynamics, particularly as regulators seek to establish clearer frameworks for digital asset compliance moving forward. Bitcoin has recently rebounded to trade near $74,000 following geopolitical and policy-driven volatility. This surge comes in the wake of fluctuating economic indicators and regulatory announcements that have shaken traditional markets. Analysts note that Bitcoin's role as a macro hedge remains intact, as it quickly adjusts to major news headlines. This resilience showcases the cryptocurrency's unique position in the financial landscape, acting as a shock absorber during times of uncertainty. The recent price movements are influenced by a combination of domestic policy shifts and international events that impact investor sentiment. For example, rising inflation and interest rate adjustments have prompted many to seek refuge in digital assets like Bitcoin. As Bitcoin continues to navigate these challenges, its ability to maintain stability will be crucial for overall market health. Traders are closely monitoring Bitcoin's performance as it may signal broader trends within the crypto ecosystem. In the coming weeks, Bitcoin's capacity to sustain this upward trajectory will be pivotal for investor confidence. Ethereum is currently facing significant downward pressure, trading near the critical threshold of $1,800. This decline is largely attributed to increased leverage and ongoing ETF outflows, which are weighing heavily on market sentiment. Analysts view the situation as precarious, highlighting a delicate balance between supply and demand that is increasingly tilted toward bearishness. The persistent outflows from exchange-traded funds signal potential fragility in spot demand, raising alarms about the sustainability of Ethereum's price levels. If key support levels fail to hold, it could trigger a wave of accelerated liquidations, further compounding the downward trend. Investors are urged to approach the market with caution as volatility continues to dominate the landscape. The current dynamics may not only affect Ethereum, but could also have broader implications for the cryptocurrency market as a whole. As traders reassess their positions, the next movements will be crucial. Future price action will determine whether Ethereum can reclaim stability and restore investor confidence amidst these mounting pressures. Grayscale has reportedly set its sights on a $115 million seed deal for a Hyperliquid staking ETF, marking a significant move in the cryptocurrency investment landscape. This initiative, still in the proposal stage, reflects a growing trend among major asset managers to create regulated products centered around decentralized finance, or DeFi, assets. The rising interest from institutional players indicates a notable shift in the narrative surrounding cryptocurrencies, suggesting an increasing appetite for innovative financial products that blend traditional investment strategies with digital assets. If this proposal receives approval, it could lead to increased market volatility and a surge in interest for hype-linked offerings. Investors are closely monitoring these developments, as they may herald a new era of investment opportunities within the crypto sector. Furthermore, the introduction of such products could influence broader market dynamics, fostering greater institutional participation. As regulatory frameworks evolve, the industry anticipates a wave of new financial instruments that could reshape how investors engage with digital assets in the coming months. Hyperliquid, trading under the ticker HEAP, has surged to an unprecedented high of $68.64, marking a significant milestone in its trading history. This remarkable increase of nearly 50% over the past month is primarily driven by a wave of speculative trading and recent developments in the cryptocurrency landscape. The approval of Bitcoin Perpetual futures has generated excitement, leading to increased trading volumes and interest in derivatives. Additionally, substantial inflows into hype-linked exchange-traded funds, ETFs, have further bolstered investor confidence. As institutional investors increasingly recognize Hyperliquid's potential, it has emerged as a pivotal player within the crypto market. However, this rapid ascent is not without risks, as the heightened volatility associated with such speculative momentum can lead to sudden price corrections. Investors are advised to approach this asset with caution, balancing potential rewards against possible downturns. Looking ahead, the trajectory of Hyperliquid will be influenced by ongoing regulatory developments and market dynamics. The next few months will be crucial for Hype as it seeks to solidify its position amidst evolving market conditions and investor sentiment. The Commodity Futures Trading Commission has officially approved the first Bitcoin Perpetual futures on a U.S. regulated exchange. This landmark decision marks a pivotal moment in the evolution of cryptocurrency trading, as perpetual futures allow traders to hold positions indefinitely without worrying about expiration dates. Historically, traders have relied on offshore venues for such products, often exposing themselves to regulatory uncertainties. This approval not only enhances trading opportunities, but also signifies a broader acceptance of digital assets within traditional financial frameworks. The move is seen as a vital step towards mainstream adoption, as it fosters greater price discovery and market stability. Additionally, the introduction of regulated perpetual futures could attract institutional investors who have been hesitant to enter the market due to regulatory concerns. The approval may lead to an influx of capital, enhancing liquidity and enabling more sophisticated trading strategies. As market participants adjust their strategies in response, the potential for increased volatility also arises. Looking ahead, the successful integration of these futures could serve as a catalyst for further regulatory advancements, paving the way for additional cryptocurrency derivatives and ultimately contributing to the maturation of the crypto market. This shift could redefine how institutions engage with digital currencies in the coming years. The launch of the VanEck BNB Spot ETF on Nasdaq marks a transformative moment for the cryptocurrency's institutional landscape. This pivotal event provides traditional investors with a regulated avenue to gain exposure to BNB, the native token of the Binance Smart Chain, potentially broadening demand beyond the existing crypto user base. Historically, the introduction of spot ETFs for digital assets like Bitcoin and Ethereum has led to significant market reactions, often resulting in a re-rating effect in prices due to increased inflows. By facilitating easier access to digital assets, the VanEck ETF could catalyze a new wave of institutional investment in BNB and the broader cryptocurrency market. The significance of this launch extends beyond mere investment opportunities. It represents a crucial step towards mainstream acceptance of cryptocurrencies, as it allows institutions to participate in a regulated environment. Enhanced liquidity and greater price stability may arise as more traditional investors enter the space, further solidifying cryptocurrency's role in diversified portfolios. Market analysts are closely monitoring the ETF's impact on BNB's performance and overall investor sentiment in the crypto sector. If the VanEck BNB ETF proves successful, it could pave the way for additional institutional products, encouraging further legitimization of cryptocurrencies in mainstream finance. This may ultimately lead to a more robust and resilient cryptocurrency market, fostering long-term growth. Thank you for watching our top 10 news stories today. Which story surprised you the most? Don't forget to like and subscribe for more updates.